Welcome back. I am Devlyn Steele, Director of Education at Augusta Precious Metals. A lot happened this week, some expected, some not expected. Let's take a look. Before we begin, remember to like this video and subscribe for more economic updates. One of the bigger news items from the economic week was the announcement that all 23 of the U.S. banks subject to the Federal Reserve's annual stress test received a passing grade. The test revealed that each of the financial institutions would be able to absorb the impact of a severe global recession. The results confirm the current resilience of America's largest banks at a time when uncertainty persists about the overall strength of the financial system. The test showed that the banks would have enough capital to withstand projected losses and keep lending in a scenario where unemployment reaches 10% and the stock market drops by 45%. The stress test was applied only to the largest banks, such as global systemically important J.P. Morgan Chase and Bank of America. The nation's biggest regional banks, like PNC and Truist, were also tested, but smaller banks were not. As a result, noted CNBC, clearing the stress test hurdle isn't the all-clear signal it's been in previous years. One of the reasons why they might feel this way is that shortly before Silicon Valley Bank failed, they passed a stress test. In other news this week, the Commerce Department released its third and final estimate of GDP growth for the first quarter of 2023. It turns out that GDP increased by an annualized rate of 2% in the first quarter, sharply higher than the second estimate of 1.3% and also well above the 1.4% rate economists had projected. The revised figure could raise the likelihood that the Federal Reserve moves ahead with additional rate hikes later this year. At its most recent policy meeting, the Fed decided to pause interest rate increases for now, but are considering additional tightening later based on new economic data. And speaking of the news that may convince the Fed that additional rate hikes are in order, the Conference Board revealed earlier this week that its closely watched Consumer Confidence Index took a big jump from May to June. The index climbed to a reading of 109.7 this month, well above the 102.5 measure recorded in May. This month's figure is the highest for the index since January 2022, and much higher than the 103.9 projected by economists. Thanks for watching. This is Devlyn Steele for Augusta Precious Metals, wishing you a happy 4th of July weekend and looking forward to seeing you soon.